Hello guys, it's Tuesday, September of 12th, and this is Alan Hong, market analyst of GKFXPrime. And I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So the first instrument we're referring here is the dollar index in 4-hourly charts. So the US dollars index, which measures the greenbacks ranks against trade weight basket of 6 major currencies, it was rose against the basket of major currencies on Monday, up 0.57% to 91.83. So it was buoyed by a sharp fall in demand for safe haven currencies as the geopolitical uncertainty was eased after North Korea did not conduct a nuclear test over the weekend as feared. So the dollar climbed from its deepest really drop in 2 months as risk on sentiment returned after North Korea marked the 69th anniversary of its founding on Saturday without any further missiles or nuclear tests, easing demand for a safe haven currency like the yen and Swiss franc. And meanwhile, investors expressed relief after Hurricane Irma was downgraded to a tropical storm and lowering the potential of further damage to the US. So as some commenters estimated the damage from Irma to be about 100 billion US dollars. So despite its rebound on Monday's outlook for dollar remained bearish as speculators ramp up the short bets on the greenback to nearly 5-year high. This is according to data from Commodity Future Trading Commissions, the CFTC. Well, the single currency was gave up the recent gains against the dollars, falling 0.58% to traded around 1.1965 after the European Central Bank board members Benoit Coyle said improved Eurozone growth could offset some of the negative effects of the euro strength, but a persistent exchange rate shock could drag down inflation. Having attacked in commodities markets, the gold price was fell on Monday. It was down $15.73 or 1.16% to $1,335.49 a troy ounce. So it was pressured by a rebound in the dollar from its steepest daily drop in 2 months amid a fall in safe haven demand after concerns over both geopolitical tensions on the Korean Peninsula and Hurricane Irma was eased. So dollar denominated assets such as gold are sensitive to move in the dollars, so a rise in the dollar makes gold more expensive for holders of foreign currencies and thus reduces the demand. So according to a report from the Commodity Futures Trading Commissions, the CFTC on Friday, the dip in gold prices comes against a surge in buying activity among money managers after net bullish bets on gold was rose to 245,300, which is the highest in nearly 12 months. As for the oil price, the West Texas Intermediate crude price was settled higher on Mondays, rose 1.3% and settled at $48.07 a barrel amid an uptick in sentiment after Saudi Arabia said its oil ministers held talks with counterparts over the possibility of extending the supply cut agreement beyond March 2018. So Saudi Arabia's OPEC's de facto leader and the world's largest exporter said Sunday that the country Energy Minister Khalid Al-Falih met with his Venezuelan and Kazakh counterparts to discuss an extension of OPEC's supply cut agreements. So in May, OPEC and non-OPEC members agreed to extend production cuts of 1.8 million barrels per day for a period of 9 months until March 2018. But rising production from the US, Nigeria, and Libya has undermined the oil cartels' effort to curb excess supplies. So the uptick in sentiment on oil prices comes against concerns that falling US oil demand could weigh on the crude futures in the wake of Hurricane Irma, which made the landfall in the US over the weekends. And meanwhile, monthly reports from the OPEC and International's every agency due Tuesday and Wednesday, respectively, are expected to provide market participants with an update on OPEC productions and global demand forecasts. So OPEC has faced criticism in recent months as investors questions the oil cartel's commitments to curb productions after OPEC's compliance rate with output cuts fell to its lowest this year in July. And now we're gonna review the highlighted economic data on the Mondays as well as the focus data and event for today. So yesterday, Mondays, Canada was released the housing starts for August, and it was as 223,200, which is slightly better than the expectations of economists at 216,000. Alright, so as for today, we can focus on the data which will be released by the United Kingdom for the CPI Consumer Price Index, which we refer as the inflation of August, okay, of United Kingdom, and it is expected to be slightly better from previous 2.6% growth to 2.8% growth. Right, so during the North American trading hours tonight, United States is going to release the JLOTs job openings for July, and it is expected to be decreased from previous 6.163 millions to 5.96 millions. Okay, so last data tonight will be the crude oil data, which will be released by the API of United States. Okay, so the data is weekly crude oil stocks, and we're referring to the previous figure at 2.791 millions. Right. So now it's the technical analysis sessions, and first instruments referring to the GBP/USD in 4-hourly charts. So the Great British Pounds is traded against the US dollars, remain in an uptrend structures, okay, in an uptrend structures, and it was continuing its uptrend and currently traded above the both moving average lines. So the both moving average line is remain pointing upward, suggesting to remain in uptrend structures, but however also referring to the both movement lines in the MACD, which will cross and pointing downward now. So it's considered signals to for it to move slightly lower in short term as retracements. So a closure that's above the resistance level of 1.323 is suggesting for continuations of uptrend and probably to surge towards the next resistance level at 1.327. While the euro remained traded in an uptrend structure against the US dollar as well, but however it was formed a double top pattern with the neckline at 1.181. So currently it is traded between the both moving average lines. It signals for it to be ranging in short terms. So closing below the support level of 1.191 will be suggesting is to retrace more and fall further towards the next support level at 1.187. The Kiwi currently traded in a downtrend structure against the US dollar, and it is remain traded in a range between 0.723 and 0.729 following the formations of golden cross by both moving average lines. So referring to the MACD indicator, the both movement lines were pointing nowhere with weak momentums. So this was suggesting to be ranging further, and closure out of the range considered a signal for it to move further towards the directions of the side it breakout. So the next support level we can refer to 0.713 and resistance level refer to 0.734. While the OZ remained traded in an uptrend against the US dollars, and it was lost momentum following the closures below the support level of 0.804. So currently it is traded between the both moving average lines, so it is a signal for it to experience a short-term retracement, and probably to be traded ranging between 0.8 and 0.805. So a closure that's below 0.8 is will be suggesting is to retrace more and fall further towards the next support level at 0.797. And looking into the safe haven Japanese yen, it is remain traded in a downtrend structure against the US dollars. So it is remain traded in the downtrend channels following the lowest levels, a rebound from the lowest level of the channels. So it is expected to be traded higher in short terms, and the next resistance level we can refer to 109.8 and support level refer to 109. So as for commodities markets, the gold price remained traded in an uptrend structures, but it was retraced from the recent high at the resistance level of $1,357, and currently it was fell to the level below the both moving earth lines, so suggesting to experience a retracement period and probably to fall further towards the next support level at $1,300 after its closing below the support level of $1,321 a troy ounce. And the crude oil price, we're referring to the West Texas Intermediate crude price. It was remained traded in an uptrend structures, but it was lost momentum after it retraced from recent high or the resistance level of $49.40. So currently it is traded between the both moving earth lines, so consider signals for it to ranging further in short terms. So referring to the MACD indicator with the both movement lines moving flat, additionally with the weak momentums, the West Texas Intermediate crude price is suggested to be traded ranging between $47.50 and $48 a barrel in short term. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.